This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. This is Joe Rabil with Invest Like a Pro. So many of you know that I've been providing stock research and consulting to institutions for the past 30 years. But I think there was a learning curve for me, especially at the beginning, because I started working with these guys that are true pros, very, very good at what they do. And when they would bring a stock to me that they really liked, and they'd even tell me some background behind why it's such a good stock, I would get enticed by it and think that something that I'm seeing in my work is telling me something wrong. In other words, I would be like, wow, maybe what I'm seeing is wrong based on what they're saying. But the reason why they had hired me is because they realized what they're trying to do is mesh the fundamentals with the technicals. And so I think, in today's video, I want to just describe to you how I think my process or my method should be used. Most of the time, you're going to find ideas through media outlets. Sometimes it'll be through screening process if you do a fundamental screen. It could be any number of sources. But what I would guard you against is not being your own analyst. If you're going to just take other people's advice and just ignore what you've learned from this channel, then I think you're going to be in a really difficult spot, because what you're going to be doing is going to be very haphazard. And what I would suggest is take these ideas. So, I'm still working with institutional money managers. I see stocks nonstop. I have stocks basically recommended to me nonstop. I have to have some kind of my own filter. So I've created my own way of looking at things and saying, okay, does this stock meet my criteria? And you need to do the same thing. And that's why at the beginning of every video, I say you got to do your own due diligence, because I don't recommend you just diving in and taking my approach and just doing it without seeing anything else. I would use other things. Or you have enough experience to be able to apply it in a way where you learn over time, use smaller risk, and then as you build up more experience with it, yes, you can make money on this as a standalone system. I'm not trying to tell you can't do that, but most people that I know have some other way of coming up with ideas. And I think it's also a good idea to make sure that the companies that you're doing have something behind it. Like there's something real meaningful behind a stock move. So I don't often look at the fundamentals, but I do look at the news to see what is causing this and what was the reason why a stock might have been showing really powerful momentum characteristics. So as we get into this today, I want to actually explain to you a stock that has been dramatically in the news, significantly in the news with this buyout from Musk. And Twitter had made a pretty good move. And my question to you is, did you get caught in this? Did you think that this pullback here was a buyable pullback? Because if you did, you need to go back, read my book. You need to go back through some of my videos and understand this was not a trade. In fact, I got some people asking me about this as this was pulling back, and I said, no, it's a no trade. And it's pretty simple. Yeah, there was good momentum here, right? We had good confirmation here. We got a nice pullback. Now, if you wanted to trade this for just a little move back to this prior high, okay, then you might have been able to do that, but you had to be really nimble to pull that off. But most of the people that were asking me were thinking, no, is this the start of something really meaningful? And what I'm looking at when I go, so this is why I keep saying, even if you want to trade off the daily chart, you have to check the bigger time frames and make sure that what you have is confluence amongst multiple time frames. Because when this gapped up right up here on the daily chart, it was hitting the 40-week, which was declining, and it was hitting the 18-month, right? Flat 18-month. And it was hitting price resistance on this chart as well. You can see it on the weekly where this had been a problem area. We were starting to get the MACD come up towards the zero line. Okay, so you can't look at something just based on one time frame and not look up. If you don't look up, you can do it and you will have some success. There will be times where you'll make some money and it'll work out, but you're doing it in a way that where you don't have conscious competence. You want to be able to understand why you're making money. And what you're looking for is this pattern where there's a significant amount of room on the weekly and a significant amount of room on the monthly, or even better yet, you're doing it in conjunction with the longer term uptrend. So if you're getting yourself caught in these kind of patterns, playing this with these kind of problems overhead, you need to make sure you truly understand multiple time frames, because I don't put up 4 charts just because I think it looks cool, okay? I mean, I'm doing it because it's so helpful. I can look at this. The moment someone's calling me when the stock's up here at 50 and they're saying, what do you think? I'm like, this is just a no. I mean, I just don't see the potential. Now, yeah, maybe 1-2 times out of 100, it'll just keep going. So it's possible. And I say this over and over again when I'm doing teaching one-on-one is, that there's a possibility that this could keep going, but the probabilities work against you. And I play total probabilities. So if I know something has a 5% chance of happening, I'm probably not that interested. But if a stock has a 60 or 70 or 80% chance of doing something, then I'm a lot more intrigued. And that's usually when I've got, the long-term chart and the intermediate-term chart in my favor taking this type of trade. Now, it doesn't always have to be that way, and that's why I mentioned the counter trend setup. So if you have a counter trend play and you have plenty of room to resistance in the moving averages on the higher time frame, so let's say you got a setup down here and you have all this room to get up into the low 50s. Okay, well then I'm willing to do that off the daily chart. But you gotta know what you're looking at. And the reason why I spend so much time looking at all these different time frames for all these different stocks. I mean, it doesn't make my life easier, but it makes my analysis that much better. And you want to be able to take all these ideas that are coming your way. If you read the paper, there's nonstop. If you're looking online, if you're watching CNBC, I mean, you might think that Cramer knows more than you, and he knows a lot about the market. I'm not going to poo-poo Cramer or anything. I'm just saying, if you take any idea that Cramer brings up and put it through this methodology and make sure it meets the criteria that you're looking at, so then that it meets he likes it and you like it based on what you're seeing, then you have a much better chance of making money. If you just ignore this and go with Cramer, you're going to find a lot of times that you're getting hammered in stocks, okay? Don't listen to guys on Wall Street you think are smarter than you. Follow your own plan. Use your own methodology, come up with ideas. And if you're going to do screens, I actually recommend going with fundamental screens and then look at them based on the technicals and see which ones have the best timing. That's a much better way to do it. Now, you can do technical screens as well and start out with ones that have good monthly and weekly characteristics or good momentum characteristics on the weekly, and then look at everything else based on that. There's nothing wrong with that, but you kind of want to know what a company's doing, and especially what group action is taking place, industry group and sector action. That can play a big role in whether you're going to make money or not. I mean, Twitter made a big move, but it was about the only stock in the software area, the packaged software area that was really doing anything. So it was kind of trying to climb up on its own. And that was another reason why I just didn't see it making it. But this 18-month and this 40-week declining, I mean, that was just crystal clear, not to mention the fact that we were getting a MACD zero-line reversal. So keep these things in mind when you're looking at stocks and you're getting a lot of things coming your way. Don't get sucked into the hype. Okay? Avoid the hype. Go back to your process. Incorporate what I've talked about in my book and my videos. Use MACD, use ADX, use the moving average environment, especially use the price action in 4 different time frames, and especially the 3 major time frames, monthly, weekly, daily. And I think you're going to have a lot more success. You almost have to turn everything off and just take the information and then apply it to what you're going to do. Now, I'm not saying you have to use my approach 100%, but you have to have some version of this where you have a lot of confidence that Any stock that is brought to you goes through that filter. And if it doesn't meet your filter, your criteria, it's a no until it does. And when it does, then you might have a match. Look for the matches, and I think you're going to make a lot more money. All right, go ahead and post any questions or comments. Thanks.